Hey everyone, Broadcom, ticker symbol AVGO, reported fiscal year 2023 second quarter earnings results that have sent the stock soaring. So in this video, I'm going to review its latest financial results and I'm going to update my recommendation. Coming into this quarter, I had the stock rated as a buy, and I will provide you with an update on that recommendation, let you know if it's changed by the end of this video. So let's get right into it. So revenue increased by 8% to 8.7 billion. Earnings per share jumped to $8.15, up from $5.93 in the same quarter the prior year. The company had benefited from a long backlog of orders during the that stemmed from the earlier parts of the pandemic when there were shortages for semiconductors. The company is still fulfilling a lot of those orders, and it's benefiting from a strong environment for semiconductors. In fact, semiconductor revenue was up by 9% to 6.8 billion, while its infrastructure revenue was only up by 3% to 1.9 billion. That truly shows and highlights just how strong semiconductor business has been for Broadcom. Cash flow from operations increased to 4.5 billion. That was up from 4.2 billion year over year. Broadcom is forecasting third quarter revenue of 8.9 billion, which would be an incremental increase from this quarter and sustains the healthy growth for Broadcom in the current year. Broadcom repurchased $3.4 billion of stock in the current quarter. When management is repurchasing its own stock, that tells me that management thinks that its stock is undervalued. Although the record for management stock buybacks is questionable in terms of whether that has come at a time when the stock price is at too expensive levels or inexpensive levels. Still, when management is repurchasing shares, I like to see that. It shows confidence in the company. It's something that encourages me as a potential investor. Broadcom also approved a quarterly cash dividend of $4.60 per share, payable on June 30th. So the company is delivering nice dividends per share in addition to stock price gains. So to answer the question, is Broadcom stock still a buy in my book? Is it a good dividend stock to buy? I'm going to update my recommendation and say it's time to take profits in the stock. It's if you've owned the stock from the time I recommended it, which was earlier in the year, you're up very nicely so far. So I would say it's time to take profits. The stock is more expensive than it's been in recent months. I would say in the last couple of years, the stock is the most expensive it's been, looking at it on a forward PE basis. So if you've got those gains and the stock is not cheap anymore, it's a reasonable time to take profits. The company's not going to be in this environment that's been very favorable for its business for the last couple of years. That's likely to change in the near to longer term. I agree, semiconductors are catching a nice tailwind, and the rise of artificial intelligence is only fueling that growth, but it's not just going to be Broadcom that benefits from that. It's going to be an industry-wide phenomenon. So if you've been in this stock, you've got nice profits in there, it's a good time to take profits. If not, it's a good time to wait for the stock price to come down a little bit before you go into Broadcom stock. All right, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.